What's up, guys? It's Ray J back with another video. And this, I want to break down what's happening with the overall market and talk about why there might be a bit of a pullback coming as we have some huge news that just came out. However, the pullback is not going to be massive. It's not going to be a big crash. It's just going to be very, very healthy. And I do think the market could bounce, especially stocks like Tesla, once we get very close to the robotaxi event. So I still hold my same conviction, but this pullback might be kind of shallow. So get ready for a bit of a dip. So I'm going to break down exactly what's going on. Just know two things. Firstly, I'm not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link. If you sign up and deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed a 25 in total. And deposit $5,000, you're guaranteed 60 free stocks. The offer ends on June 3rd, so check it out before they run out. Anyways, why is Tesla in the market selling off in the after hours? Well, we had some big news that just came out. Keep in mind, though, that even if Tesla goes all the way down to about 200 and sorry, not 200, 333, even if we dump another 8 points from here, we could still be very bullish. As long as we're above 300, I think we're going to be completely fine. Could see a small dip here, but then we could still bounce once we hit these EMAs, bounce back up towards the 370s. This is just going to be a temporary pullback before another big bounce. I'm going to break down exactly why I say that. So, what's going on? It's not just Tesla's down 2% in the after hours. SPY is down 0.8%. It's actually dipping right now. So I do expect 585 or below. I do expect a little bit of a pullback here because of this news. The news is coming out that Moody is cutting the U.S. credit rating on the growing debt burdens. That's some huge news. We used to have a triple A rating. Now it's basically going to be downgraded to a double A rating, which is removing the US government's last triple A rating, which is not the best of news. This is making the US look a little bit less strong as one of the strongest, most high quality sovereign borrowers. So that's some big news, at least so far. Now, what else is interesting is how the market was pumping, 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 and then all of a sudden we close. And right after the market closes, they release this news. How interesting is that? But, anyways, enough about conspiracies. I'm not going to go down that route, but I just want to say that pretty crazy stuff. So, why are they downgrading the US's rating so far? Their main consensus is that it's because of the governmental debt and the interest payment ratios. They believe that the successive US administrations and Congress have failed to agree to measure to reverse the trend of the large annual fiscal deficits and the growing interest costs. And on top of this, they believe that the deficits are going to continue to rise over the next decade, and there's going to be rising entitlement spending and little change by the government revenue. So that's what they said so far in their report. They also anticipate that the interest payments are going to be rising about 78% of the total US spending by 2035 from about 73% this year. So they're expecting a big increases in our debt and the payments. And they also believe that with what's going on, the deficits are just not really, going down the way they want them to. They also are anticipating a potential widening close of the GDP by 2035. So they see the deficits widening, for the GDP. And they also mentioned the assumption that there could be a contraction in the GDP, at least for the short term. They did talk about that. They didn't really talk too much about the tariffs, but they did talk about the disruptions that are going on so far. So their view of the US economy is that basically there is strength in the US economy. The US still has a decent rating. A double A rating is not bad, but it's not as strong when it comes to its ability to borrow with the unsustainable amount of debt that we have. And that's the reason why they're giving this big downgrade. Once again, they announced this right after the market closes, which causes the market to start dipping. Despite that, President Trump is also saying that he is going to likely inform dozens of countries in the upcoming weeks about what the tariffs may look like after the 90-day pause period. So that could also cause a big disruption for stocks like Tesla. And then President Trump is also talking about India and China, about how he wants there to be a big deal with India and how he's waiting for a longer term deal with China. He also mentioned that when it comes to iPhones, he wants Apple to produce more in the US and less in India. And besides that, we have Walmart making announcements alongside Amazon that they may have to basically increase some prices amidst the supply shocks and the tariffs. So keep that in mind. With that being said, what's going on? We just have like a couple of Fed speakers on Monday. On Tuesday, it's the same thing, a bunch of Fed speakers. On Wednesday, we just have a bond auction. On Thursday, we just have some manufacturing numbers. And Friday, we have new home sales. So very minor data for the week. And then we just have minor earnings such as the Home Depot, Zoom, TJ Maxx, and Target, and more retail. So What do I see for the markets? We're tanking right now as a result of this news involving Moody. So I wouldn't be surprised if the market does pull back just a little bit, but then it's going to get bought back up again. For Tesla, we'll see if 240 holds. If it doesn't hold, I could see Tesla actually come all the way down towards 333. And if that doesn't hold, we're looking for like 330 or so. And we'll see if Tesla could get bought back up. But here's the thing about this: depending on how big the pullback is, whether we dip to 330 or even the 320s, it doesn't matter to me. This is a buying opportunity for the robotaxi events because Tesla could still make a full recovery and start pushing for the 370s or above once we get the very, very big news. So that's my view so far. We got this bad news coming out from Moody's. I do think Tesla's going to dip towards this 20 EMA right here at 333, maybe even a little bit lower, and then we'll see if we get a big bounce from there. I do think that this is going to be a good opportunity, so make sure you guys are ready as you approach the Robotaxi event. So get ready for a bit of a pullback for now. I just want to give you guys a heads up about that for Tesla. For SPY, the same thing is going on. There's a slight bearish divergence, and I anticipate 585. If it doesn't hold, we could be tipping all the way down towards like 580. So watch those supports to see if we bounce or not. I do anticipate some downside nonetheless. On the QQQ, we're looking for basically 513 to 510. We'll see if those levels hold. If not, we could be looking for a bigger dip. And if they do hold, we're looking for a big bounce. So I anticipate some downside. For the IWM, we're looking for 206 as the main support. If it doesn't hold, we're looking for essentially 205. And we'll see if we bounce from there. ES has a slight bearish divergence, so we're looking for 5,900. If that doesn't hold, we're going to be looking for a big bounce. I do think we might gap down on a Sunday once we see futures open. So keep that in mind. I do think futures are going to be down a little bit as a result of this, but we'll see if 5,900 holds or not. If not, we might dip a little bit more, but it could be another buying opportunity in a market like this. On NQ, we're looking for 21,275. If it holds, we're looking for a bounce. If not, we could be dipping more. I do anticipate we test that very, very soon. On Bitcoin, like right now, Bitcoin's starting to dip a little bit. We're going to be watching 103,500. If it doesn't hold, I see 102,500. Once again, for Tesla, we anticipate some downside at 340. We're barely at 340 right now. If it doesn't hold, we're looking for a move down to 333. 337 and 333, and we'll see if we hold. Nvidia is tanking. We're looking for 130 as our support. If it doesn't hold, we're looking for a move back down to 125. And we'll see if buyers defend. Apple's going to be dipping to 206.8. If it doesn't hold, we have a gap to fill to 198. Then we'll see if we bounce. For those who are interested, we have AMD. This is also starting to dip in the after hours. I do anticipate 113. If it doesn't hold, we're looking for essentially 110. And we'll see if we bounce off those levels, but I do anticipate downside. Coinbase should be testing 245 before it tries to bounce. Amazon should be dipping to 198 to fill this gap now. I do anticipate some downside. Meta might be retesting 614. Microsoft has 449 and eventually 436 as our supports. And Google may be dipping to about 164 to 162, and we'll see if buyers defend. So I anticipate the whole market's going to come down, and the VIX has a bullish divergence, so we're looking for a push to fill the gap to 22. So it's very simple. Anticipate some downside. Get ready for a bit of a dip. I do think we're going to likely dip as a result of this news. And then it's not the end of the world. This is just going to be another opportunity once we see the market base. We'll just be very, very patient going into next week to see where we bottom. And then we'll be looking for a much larger bounce. That's my prediction for now. I wanted to make this video very simple and short, so I thank you for listening. I'll be back tomorrow with another upload. Until then, guys, enjoy your weekend and peace out.